This is the Build Tech Stack Equity Podcast. We dive into the inspiring stories of underrepresented tech entrepreneurs and investors. This episode is courtesy of Tesoro AI, the #1 recruiting firm for software development and AI talent.
All right, Eduardo, welcome to the show. Appreciate you taking some time out to join us.
Hi, Darius. Thank you for taking the time to talk and let me give me this glimpse of window to talk a little bit about myself and everything. So pretty humble.
Yeah, absolutely. So you are calling in, or I should say logging in from Brazil. To kick things off, I'd love for you to just talk a little bit more about your professional career path, right? So saw you did undergrad out in Brazil, Wharton MBA grad. What did life look like for you as you progressed through your career path to eventually become the founder of a venture capital firm?
Great points. I must say that I probably has the most unusual path into getting into a VC. Before getting to undergrad, I actually did kind of two of them. And the first one I was in the Air Force in Brazil. So that's why the fund is called Airborne, it's just because I was in the Air Force training to be a pilot. That didn't go as expected, and then I became an engineer. But also as an engineer, I like the numbers, stuff like that, technology by that time, 25 years ago. However, I started my career as a consultant, management consultant, company such as McKinsey, went through the industry in consumer goods and the real economy, as if you may. Things that at the time it didn't scale, but even though Google was a small company, like 5 years old, and the thing is that it started progressing. I realized that there's a very good opportunity for us to to look at the investments in a way that it can be scalable and it could be good for not only investors but the investees. But that time was kind of private equity, but it was in the height of 2008. You know very well what happened this year, that
Right.
year specific. And actually the market crumbled, and we thought that it was the end of it, but actually it was just a new beginning.
Mm-hmm.
A few years later, I left for the MBA, as you said. I went to Wharton, and I spent 2 years, a couple of years in Philadelphia, doing everything that I could. Very good time there.
Yeah.
And when I came back, I decided to be entrepreneur, a tech entrepreneur. MBA helped me kind of making my mind in terms of what I would pursue. And then I joined Rock the Internet, which used to be kind of a McKinsey back in the day for entrepreneurs or people who would be turning into entrepreneurs. Very good school, very good school. Rocket was. So I, what I realized that I want to be I'll say real deal entrepreneur. I remember that I was 30 something, and then I said, well, that's the last time I could actually do something because I'm getting too old. More than 10 years later, I still feel so young. So that's kind of a dichotomy you see in life. But we actually founded a venture builder in Brazil, and we co-founded a few businesses, and one of them went very well. We sold it 5 years down the road for more than $1 billion in reais, which is 300 million USD at the time. It was really nice. And then I was invited to lead one of the biggest banks in Brazil, venture capital arm. So that was so it was very good experience as well. I managed to invest another 200 million USD in more than 30 companies, adding up to the 30 I had before and 20 I had after. So encompassing about 70, 80 companies in my career so far. And those companies, they ended up raising more than 3 billion in USD in cash after we invested. So we are in the beginning of their journey, and people who came after poured in a lot of money after that. So, and the companies are doing well. Some of them, if you take vintage wise, first vintage pre being an institutional investor, it's just like 10 times, which is pretty good. And then vintage, while I was institutional investor at Bradesco, it's 3 times as much, but a much bigger fund, almost $1 billion reais, which is a lot of money down here. And last fund is after I left the bank. I decided to put up my own shop, so take the reins of my life and my career. And then I raised a micro fund, more 5 million USD, and I invested in 15 companies. Those companies are doing great. So we are around 2 and 3 times invested capital in around 2 or 3 years. But we invested most of it 2021, 22 vintage. So even though it was in the high, our companies are doing great.
Mm-hmm.
So that's one thing that I'm very proud of, and that's a little bit of it. And this late 2024, I went to the for the second fund and started raising. So that's exactly where I am right now, raising the second fund to keep digging some gold nuggets into the region
Yeah,
from
yeah,
the region.
yeah. So interesting experience, right? You management consulting over at McKinsey to tech startup. Then you start a venture builder, and the basic idea of the venture builder is, you're finding founders to then go build a company with. Now, question: with your venture builder, were you finding the founders or the executives who would run the company first and build based on an idea that they brought to you, or did you already have the idea and then you would find an executive or a founder to come in and build based on an idea that you had already created?
We tried both, to be honest, but the one that actually was what we found out is that it's good to have what we called at the time an insider. What was that guy? For example, if you are journeying into fintechs, and being very broad because fintech has many subclasses, but
Mm-hmm.
fintech, you need to have a fintech insider. If you're doing health, you need a health insider.
Right.
If you're doing deep tech, you need a deep tech insider. And why is that? That's pretty much because there's a lot of things that you don't know, and it's gonna take you like 5, 10 years to get to know it.
Right.
On the other hand, it's much easier for you to find a guy who is amazing in finance or amazing in marketing or something like that, rather than finding someone that's amazing in insiderly. I would say that the word doesn't exist, but
Yeah.
just for the sake of demonstrating, and also it's very well aligned, because if this guy insider, he must be close to the heart of the company.
Right.
If you hire this guy and this guy leaves, or this guy doesn't actually work, you're taking part of the company. And sometimes you're just exposing the company to that person, and that person just gonna build your copycat, and then you're gonna have a problem. So the insider is very important. But we did try. We had an amazing theory, amazing business investment thesis, a business model, and we
Mm-hmm.
tried to do that, and we hired people from abroad to do that. It didn't work.
Mm.
So, well, it might work, but in our case it didn't. Okay, so our best case was someone that we teamed up. He knew how to do it, what he was doing, and he had lots of, let's say, pre-existent knowledge that eventually said 5 years down the road we are up to the point. But the first 2 3 years
Yeah.
they were raining.
Okay. Okay. So yeah, interesting experience there, really, because you're taking something from ground zero, literally ground zero, and growing from there. Then you move into corporate venture capital. I'm assuming it's
Yes.
corporate. Yeah. Okay. So corporate venture capital, where you're working inside of a larger corporation, and they set aside funds for VC style investments. We're able to write much larger checks, I
Yeah.
assume, but we're more hands off when it comes to the investment, right? So not actually kind of being essentially a co-founder with the founders.
Yeah, exactly. If you may, the idea when I joined this CVC unit, you're correct. It was a CVC, and must many of the CVC aspects of it. So what happened later is that if you are CVC, you're kind of playing a game that may not be the same VC game.
Right.
Especially here, you have some misleading things that may happen. That in US is kind of different, to be honest. I think that US market is more open to CVCs than any other places. It's also the way people invest. But again, what I turned this CVC unit as close as possible to a VC unit. But
Mm-hmm.
again, in terms of governance of decision making process, we also had the bank, or the board of directors of the holding company taking some shots. So that's the point that was not so good about it. Yeah, but that's the that is a little bit of what happened.
Okay. So let's put a pin there because what I do want to talk about is after that experience, you decided, hey, look, I'm going to go start my own
Sure.
shop, right? And so your fund, Airborne Ventures, is based in Sao Paulo, correct?
Correct.
Okay,
That's right.
based in Sao Paulo, right? And now that you want to go out and you're hey, you took the title off, you took the banner of the CVC off. I'm going to become my own venture capital firm. First step is you need to go out and raise a fund, right? You mentioned $5 million fund for first fund. What was that experience though? What was it like to go out and raise a fund in Sao Paulo, Brazil, where the fundraising market isn't as robust as what you see in the US?
That's a very good question, to be honest, because people sometimes they take for granted that a 5 million USD in US, I think it's a very tiny fund.
Yes, a
And
very. I was actually looking at a founder who was talking about running a $5 million fund in the U.S. And a lot of times, even the management fees you're getting off a $5 million fund aren't anything. And most folks who are in that, I mean, the number they cited was 10 million, right? So if
yeah,
you're running a $10 million fund, the management fees aren't going to be anything substantial. And most founders of the fund end up having a second job, so to speak, to keep the lights on, right? And I don't think a lot of people think about that. You just hear venture capital fund, person must be rich. No, there's a lot of folks who have to do other things. I don't want to go too far off on that tangent, but I do want to I want to give you opportunity to talk about your experience raising a $5 million fund out in Brazil and and even throw in some of the differences as well.
no, it's very nice that you brought it up because that's correct. Sometimes people say, "Hey, there's your management fee, 220, whatever," and then in the end of the day, this 220 doesn't actually add up as much for you to keep the lights on. And people, not that you must be rich, but also you have to maintain. You have to have other, let's say, income flows, right? So income sources, which might be the case, or sometimes you just have good stories that they are paying you off from previous deals. As I said, I started investing in 2015. So almost 10 years ago, some of the things that I did in the past, they are coming now. So I'm getting their payouts now and so on and so forth. But 5 million USD in Brazil or Latin America in general versus 5 million in US is very different.
If you're a hiring manager and you appreciate the unique skill sets required to build AI solutions, then I would highly suggest you get your hands on our AI talent salary guide. As you know, one of the greatest challenges in building AI products is acquiring the right team. Over 100 plus pages, we dive deep into our global AI talent acquisition strategies. And with our networks in Latin America, we also provide you with actionable advice on how you can scale up your AI team cost efficiently. Once you explore our AI talent acquisition strategies, you'll never look at hiring the same way again. Links are in the description. Yeah. Oh, one point I want to make, just for anyone who's not familiar with VC terminology or investing terminology, right? So, management fee is the fee that the venture capital firm charges to the LP, the limited partner,
Correct.
the folks who invest in the VC, and the 20% is the profits that you're able to basically what the VC firm gets as a percentage of profits from a successful fund. Right. Okay.
That's
Yeah.
correct.
Sorry. I just wanted to make sure that we were properly located.
No, thank you very much for being that. If I actually fall into one of those other traps that, putting some jargons over here, please help me out. That was a very good call. So I was saying that is, for example, you have the exchange rate, you have the price, you have everything else. So I would say that a coffee in the US is $8. A coffee in Brazil, it's 8 reais. So the coffee in US costs 6 times as much.
Mm-hmm,
So that's
mm-hmm.
one thing that for starters. So we have to have this idea. So in terms of a check size, 100K USD in Brazil goes a long way. So you can actually start doing some things. So you can build like pre-seed or something like that. If you get a million check size in a startup for in Brazil, this company can do the whole seed thing if they are smart enough. So that's one of the things as well. So you have to think about it. And in terms of pricing, you have Brazil rounds, initial rounds go from 3 to 10-ish, depending on how you negotiate, how I would say how good are the founders, how good are the opportunity. In the US, it starts as 12 to 20. So there's a price arbitrage in there. I
Mm-hmm.
invest in companies up to 5 million. So
Right.
5 million USD. So up to. So if I go to the US right off the bat, I get a company that is not PowerPoint anymore. They have revenues, they have stuff, they have clients, and they become a 20 million USD company.
Right.
So and it's a 3 to 6 month window. So it's not that much. But in terms of how to invest, or doing trying to find the gold nuggets in Brazil, also there's some things that are different in terms of what kind of company would you actually look for
Yeah.
when you
But
look in
before we
you.
go there, because what I do want to key in on is what does it look like to raise a fund, right? So
Oh yeah, yeah,
the
sure.
$5 million fund, right? Like I'm starting
Yeah,
with zero,
how,
you know?
how is how it all started, because I'm going a little bit further.
uh,
That's thanks for bringing me back. Look, the best way for you to do it, once I heard from a founder who I invested my for one of the first angel checks, said before you make money for yourself, you have to make money for someone else. And actually that became a mantra, because you cannot make money if you're not adding. You have to add value to someone, they will add value to you.
mhm,
That's the thing. So if you have this mindset, people will be always trying to add value to other people.
right.
So why is that? When I decide to run or to raise the first fund, I have just added immense value to some of people. So those guys, I invested maybe 3 to 5 mil USD in a company, and then this check size became 10 times as much
Mm,
2 years later. So we entry and we exited in 2 years, and we made 10 times. So
right.
the IRR was tremendous. The entrepreneurs, they made lots of money, almost 80 million USD. Some guys who invested before me, they made like 20 times as much. So it was amazing deal.
Mhm.
Okay, amazing. So they love it. So that's one of the things. And then I came back to them one day, say, hey, you know what, you guys are liquid, I know you guys have to do this and that for your portfolio, but what if you set aside some money here and try start doing our thing?
When you say you said they were or were not liquid,
They were liquid. They
right? They
were.
were.
They had just made an IPO in Nasdaq, so they had some.
Okay.
But well, actually, they sold the company who IPO'd, so they were liquid, very liquid.
Right.
So
Okay. Right. Just meaning their money. If you were illiquid, right, you probably have a ton of money that
stocks,
you've made, but it's tied up in equity versus being liquid, where you've actually made the
real
exit,
estate, stuff like
received
that.
the cash inflow. Okay, so now you've got some founders that you invested in. You yourself invested 3 to 5 million, got a 10x return on that great IRR, as you mentioned. And now these founders are saying, hey, look, you took a bet on us, paid off. You came back to them as you were going to launch your VC firm.
Yeah, and they became the anchor investors of this fund. So they put up like a million or two. I don't recall. Maybe it's actually 1.5. And then we started raising the remainder. So we did that. We were raising as we went. So we did 15 deals in around 2 years, roughly 2 years. And then we raised this 2 million roughly in 18 months or 12 months or something like that. So we
Mhm.
put everybody together, made all the deals, and that's now we are just monitoring the portfolio and doing some follow-ons with the remainder that we have in cash. So that's the idea. And as I said, the funds is doing great. Many of the funds in the region, they are not doing so great on this vintage. So the idea was to keep the wheel spinning and launch another one. So the idea of the firm now is to have every 3 to 4 years have a fund of beginning. The first one was five, but get it to 5 to 10, and then I don't want to grow too fast, too big. Some of the reasons here, I know you have USV who doesn't have a very huge fund. I think it's up to 50 to 30, 300 million,
Mhm.
and they are able to do like very good returns. And why is that? Because it's much easier for you to multiply a $1 check than 1 billion check.
Yeah.
And and also it's easier to allocate, because what kind of company you have to find that can actually take 100 million USD check? And these kind of companies, they might be very good, but they're gonna grow like 5 times, if
Yeah.
so, in 5 years. And if you take a more risk down the road, of course you're gonna have more zeros, and you have to avoid that and bear that in mind. But one of this 100K check will become like a multi-million check, like 5 million, like 50 times, something like that. 50 times. Okay, so now you're talking, it's a fun bagger. and then
Right.
you have
Yeah.
something that it's actually very meaningful in terms of fund return. And in the end of the year, the day you invest in 15 companies, like five of them gives you back five times, you already have your fund back,
Yes.
and then the other companies are surplus.
Is interesting perspective there, right? Because you started with the $5 million fund. You have to be mindful of what's my check size, and then what is the size of check that I can deploy. So you're kind of doing this balance between size of check that you can deploy, the number of companies that you can write an investment to, and kind of what level of involvement that you're going to have with the company, right? Because you can't say, hey, I'm going to invest, and I'm just throwing extreme numbers out here, in 100 companies and take a board seat on all of them, right? It's not really realistic. And then as you move into fund two, you're going to do a bigger fund, but you're not saying, hey, look, fund one was successful or looks to be successful. Now we're going to raise a fund. Instead of 5 million, we're going to go 500 million, right? No. We still, and you mentioned that companies in Latin America, in Brazil, can do a lot more with, kind of less, right? Whereas companies in the US, larger check size, they got more expenses. What's changed? You're going to do a bigger fund, but what's changed? Are you writing more checks? You mentioned initial investment versus follow on. I'm curious how you're thinking about structuring fund two.
Great point. I think first I have to think about, if you are a leader or you're a follower, that's one of the things you have to take into consideration. The other thing is the stage of maturity of the company. That's another thing, and
Mm-hmm.
that's of the level of level of how close you want to be from the company. So
Right.
taking these three, three entities, for instance, the first one, if you're looking for more mature companies, probably if you want to have any kind of governance or being close to the company, you have to write a meaningful check. So
Mm-hmm.
you probably want to be a follower, not a leader. So you'll be able to get into the company access rather than leading the company conviction. So that's how your thought process should be framed.
Mm-hmm.
So for fund one, we have, I'll say, half following, half conviction. And why is that? And sometimes the size of the check are the same for following and for conviction deals, but convictions deal we got much earlier, and sometimes we get closer relationship with the team.
Mm-hmm.
So when you're doing a follower check, we do a different thing. We do smaller checks, and we just say, hey, this is a good opportunity. I have to be there and put I'll put my chips over here, and if everything goes well, I will raise a separate vehicle like a opportunity fund or a sidecar, whatever, and then I'll put more money into this company. So that's
Mm-hmm.
how it's designed. And the first fund was more like a pilot fund. I tried a few approaches on what to do. So I invested in a Series C, Series A, and Series B company. Okay, and that was on
Mm-hmm.
purpose. And the second purpose was that, so I want to see which one I can have a better edge in winning deals, get
Mm.
into the deals in a price that I like, and also what kind of companies I can add more value. So
Yeah.
that are few things that are very important. And in terms of sectors also, because I used to be a more generalist investor, and then I was trying to narrow it down to some things that I know that I can add more value than not. So right now I'm pretty focused on financial services and health and B2B kind of companies looking for efficiencies and also productivity. So if you put everything of these five items in a basket, that's what Airborne is. So
Okay.
um,
Which is so this is interesting, right? Because generally when you raise a fund, you kind of have to determine the direction. So a lot of, first funds aren't able to do, hey, we're going to do Series A, Series B, and Series C, and then across the spectrum. But you were in a fortunate situation where you had more flexible limited partners who were founders, also a smaller fund.
But
Use
also,
that.
remember, I had 10 years of experience in investing Series Seed A and B,
Ah,
Seed A, B,
gotcha.
and C. So I had the deal flow for every one of those aspects, and I had to understand which one would be easier for me. For example, I had a very good thesis and a very good interest to buying secondary shares of a Series B and C that are booming. I could do that, but that would be like a quick stint, And that's not something that I like that. Okay, but this kind of companies, this kind of company that I'll put the money, I will monitor that from far, because I don't have governance. I may have, but the kind of governance is different because they
Right.
are big companies and you're not in there into into the doing things.
Right.
You're more into the monitor and watching things. There's no
Okay.
problems. It's gonna be good deals as well. You're gonna have like 3 to 5 times, and everything is gonna be fine. So that's one of the theories. And the other thing is that if you go earlier and then you go to these companies that you know very well, you'll be talking to entrepreneurs, to industry experts all the
Hmm.
day, and I think it gets more, I would say, more fun.
Hmm.
So
Hmm.
talk a little bit about it. So, and as the time goes by, nothing it's against me to, or nothing prevents me for getting this big secondary fund and buy companies that I know. But remember, since I'm in this game for long and I'm gonna stay there for this land in this game for long, I'll be able to know the market very well. So whenever I want to buy a company, I would just have to, reach my phone and WhatsApp someone, say, "Hey, let's grab a coffee," and then I'll be able to join. So that's kind of a superpower that I have been harnessing and then I've been using now to get into
And
the early deal.
the early deal, or were you from that perspective? Were you talking about secondaries?
Yeah, no. I'm saying I could do a secondaries, but I prefer to do early deals at
Right.
this
And
point.
so secondaries is when you're actually buying a stake from existing investors versus a direct investment into the company during the round in which they are raising.
With
Which,
review discounts.
yeah, absolutely. Okay. So fund two, you're focused on fintech and healthcare. I missed the size
The
target,
size is, yeah, target size is 10 mil.
10 million. And then also what stage? Are we talking pre-seed, seed, series A?
We are between, I would say, seed. I would say pre-series A, so pre-seed and seed, but most probably more on seed and a few pre-seed deals. Sometimes there's those companies, they get kind of blurry in terms of
Right.
maturity, so you have to take your chances even earlier or even a little bit further down the road. So
Yeah.
I would say
And have
the
you set,
average would be the seed.
okay, average would be the seed. And then are there any requirements around revenue, or is it kind of case by case basis?
I like companies that they have more. I say it here in Brazil, meat. So something that you can squeeze, because sometimes if it's just an idea or something that it's too far off of being commercialized,
Mm-hmm.
that's something that I try not to get close to it. But I like things that are starting to bring up some revenue. So there's a client, we know there's a need, and we know how to make money. When I say we, it's the company, right? But the point is that they are closer to this commercialization stage. They don't need to be a blockbuster, of course, but
Right.
if they, I want to do this and see if they're gonna like it. This is not the kind of company that I do.
Yeah. And then check size, average check size. What should, like, if there's a
Well,
founder listening in and they pitch you,
of course.
right? What should they?
Well, I try to stick between 150 to 300 USD, and
Mhm.
the idea is that I can go a little bit. I can go higher than that. So when I put up a sidecar, for example, this deal that I'm doing right now, I'm doing a 500 check. I'm doing a little bit of the fund and then a little bit more with the side vehicle and
Okay.
putting everything together. And I take care of the whole thing.
Yeah. And then you talked a little bit about leading versus following. In this
Yeah.
fund, is the plan to lead on more deals? Sounds like you can do both, but is the plan to lead on more deals or follow?
I plan on leading more, following, but the first investments I would say, co-leader, something like that, because, well, or no leader, because I was a very early, and it's a founder that I have invested before. He had an exit, so the money was on him. That was an exception to the rule. But even though he had a very clear path on how to make money, and that's actually happening right now. The company I invested in February 2024,
Mm-hmm.
and by December 24, the company it has been marketed 4 times. So it's a very very good deal, and In the second company, I'm actually leading everything, due diligence, paperwork, everything. So and bringing on the other people. So have a 500K in now 1.5 million round. So that's a kind of deals.
Okay. And, I'm curious what it looks like in Brazil, right? Safes have become huge in the US, but you can also have a convertible note, you can have a price round. I guess at the seed stage, what are the securities that are being issued for the purpose of investment at the seed stage in Brazil?
That's a good question. Actually, I get it all the time. And the thing is that it depends of, well, US is pretty simple because you are in US and nobody asks where your structure is gonna be because you're in the US.
Right.
But if you are in Brazil, they're gonna ask where your structure is gonna be. If it's a Brazilian structure, sometimes you have one set of process and framework to
Mm,
understand which is the best security. If you are going to be structured in the US, no, half leg, which is Delaware, or the full leg Cayman sandwich, is going to be another thing. So you have to understand which exactly is going to be the structure before you realize what kind of security you're going to do, and also to understand which structure you're going to have. It ties up with the company strategy and profile. Some companies, they have the strategy and profile to remain within Brazil, so sometimes it doesn't really make sense to go to an offshore structure. So
right.
probably in this case, I prefer to invest through what we call a misto, which is a convertible note, but it's a mix of convertible note with the clauses of a safe. It mimics a safe, but since there's no, I would say, formal structure for a safe in Brazil, we
Hmm.
have to put it up over a C note, Brazilian C note, so
Okay.
which is convertible note. So that's the structure that I like best. And then also because of the nature of the stage, it doesn't really make much sense to do priced rounds. Priced rounds, you need your team to be a little bit more experienced in designing, for example, governance. This is not easy, and sometimes you don't want to put that in front of the investments because it's going to take long discussions.
Hmm.
Of course, you put some things that it might be on the governance final documents. You put that beforehand so you know what you're getting in, but you don't know into the gritty details, because if the company goes well, you have your master plan on top of it, and you can do that just right after.
Okay. And then, so that's for Brazilian structure. You're looking
Yes.
for kind of what's called that C note. What about, because I understand a lot of Latin American startups will actually register the company in the US so that then
Yes.
it makes it easier for US investors to invest in the startup. So in the case where it's a company that's registered in the US, what's your preferred investment vehicle?
I try to go through safes because they're faster and you can actually hit the ground running faster if it's an early stage deal. As it goes to more mature deals, I think C notes and sometimes price around, to be honest, they make more sense, because if there's not a price round, you have to actually do one so you can create the standard that we were talking before with the safe. So the safe is pretty standard. Then you do a series A or seed with the
Mhm.
price around, you create standard. After that, you can keep putting more rounds on top of it. It could be a C note. And the reason with the C notes is that it's easier for you to I would say to process, and faster and cheaper than the price round. And you put everything on the C note, and then you just put to process that after the checks in kind of a conveyor belt. That's everything is you don't need to, because the rules, they were set in the price round, so you just have to follow the rules.
Okay. Okay. No, that is super helpful. I think a lot of founders will appreciate. Oh, you also mentioned B2B. You're
Yeah,
investing in B2B companies. I know a lot
that's
of
correct.
founders get frustrated because they're like, hey, I'm going to go talk to this investor, but they have no clue what that investor believes to be a good investment for them. They don't really understand the thesis because that's not kind of like painted on the website everywhere for a lot of companies. So I know a lot of founders will appreciate that, as well as some of the terminology that you laid out here around kind of the VC landscape. So, given that you are investing in companies that are primarily in Brazil, I'm curious as you think about the types of startups that are investment worthy, particularly like VC investment worthy. There's a difference between that and a small business. What are you seeing as the most exciting within the Brazilian market? And I do want to get to kind of the difference between startup world in Brazil versus startup world in the US. But curious around that first. What do you see as the most exciting opportunities within Brazil?
Well, what I see in terms of, I would say, the current opportunities is more like, we have the vintage and the tech waves. I would say the tech wave right now, everybody's talking about it's AI, blah, blah, blah. But in
Mm-hmm.
the end of the day, AI can be anything. It's just like
Right.
the internet companies during the dot-com bubble, or I'm building an app during the
Right.
decade. Everybody was building an app, but what an app do? It's Uber, it's Airbnb, or it's Instagram kind of app. So
Right.
the thing is that we are in the brink of the AI apps. So what people are trying to do right now, they're bringing apps with they heavily use AI under the hood to make and to create value for their customers. So that's it. And you have to understand that sometimes pretty face app that you have, it's AI, they have lots of no AI stuff behind it,
Yeah. Right.
and you have integrations, you have CRMs, and you have ERPs, and you have everything that you have to make connections. Those apps, they don't talk to each other automatically. You
Mm-hmm.
have to tell them to talk to each other, and
Mm-hmm.
then in the end of the day, you can put like an AI to run, the course you have set. But sometimes the AI will not, build the course for you. So
Right.
that's the thing. So I'm looking into apps. They are trying to make life of Latin Americans easier,
Mm-hmm.
and increasing productivity. Because if you look at the history of the country, a little bit of macroeconomics, not the country but the
Yeah.
region itself, is that we've been lagging behind in terms of productivity increase. So efficiency wise, developing countries, they miss the targets in terms of efficiency increase. The one example that I love is Brazil versus Korea.
Okay.
In the 60s, they were like same thing, kind of in terms of development. And 30 years later, Korea has become, I would say, a leading country. And
Mm-hmm.
why is that? They massively invested into education, which led to efficiency. Of course, they
Mm-hmm.
have a lot of, tailwinds. I'm not going to talk about it, but also they had their headwinds and everything. So it's a different setup. But and why is that? The increase in productivity has risen, or has gone high very quickly. In Brazil or Argentina or Colombia, it didn't happen that the same way. And
Mm-hmm.
then you have the maturity of the country. When you talk about Brazil, we are 10 years ahead of Colombia and Mexico, maybe in terms of tech companies, and we are maybe 10 years behind the US. So that's the thing. How do you use that information on your behalf? And of course, you have to tropicalize or to localize the ideas, because something that works very well in the US may not work very well in Brazil or
Mm-hmm.
Argentina. Or so, so you have to understand these things, and whenever there's a arbitrage opportunity, you jump on it.
Right. So yeah, I like that idea of there's ideas that catch on in the United States and you need to localize it. Is are you making is that more exciting to you, or is there something that or are startups that are just kind of not necessarily pulling from ideas from the US, but building something that's kind of native Brazilian, are those more exciting?
I would say that native Brazilian tend to be more exciting. But there's one thing. Sometimes I think you have heard the term. For example, fintech doesn't travel well, because bringing a fintech opportunity from one country to another, unless you are in Europe, which is almost the same country, to be honest. If you go from Brazil to Argentina, it doesn't really work, because they are very different things, very
Right.
different animals. So sometimes it's easier for you to go from Brazil to the US rather than Brazil to Colombia, for several reasons. So some of the opportunities that are native Brazilian, I'll say, they tend to be very well localized by default, but they suffer for being internationalized. So sometimes you
Mm.
take something that comes out of Brazil, but with a global mindset. And that's a kind of opportunity that can give you a bigger opportunity to grow and to become big. However, if you grow very well in the region, you're gonna be a monster. Take it, for example, Nubank, take it
Hmm.
Mercado Libre. They I think they're two biggest companies in Latin America that came from the venture scene, and they are really big. They are really big, and they
Yeah,
are local natives. For example, Mercado Libre is Argentinian, and Nubank it's Brazilian, by a Colombian guy, but it's Brazilian company. And take that for instance, right? But also you have, for example, Jim Pass from a very good friend of mine. He went to US and then he's conquering America with his new brand, Wellhub. So
yeah,
that's another thing. But also you have companies that have been doing a great job in Brazil. They stay in Brazil and they are really big in Brazil,
yeah.
or in general terms.
Definitely would be interesting to see. You hear a lot about U.S. companies expanding internationally, but to see more, expanding to other countries, I should say, but then to see, let's say, Latin American startups begin to then expand into developed markets. I'm curious what your thoughts are. To me, right, it's very clear the play for B2C, right? There's a huge population across all countries in Latin America, especially Brazil. So if you can win on a B2C side, you've got enough individuals to create enough transactions where you can make some money. On the B2B side, again, correct me if I'm wrong here, the number of large businesses that you would be able to sell into are fewer than if you were a US based startup. You could probably get into mid-size and there are probably a larger quantity of mid-size and enterprise type businesses to sell into. So with your focus on B2B, I would like to know more about how you think about opportunities within B2B in Brazil.
Look, that's a very good question, to be honest. And remember that if you're looking at the companies here in Brazil, or B2B or enterprise companies, US has a lot more companies that can afford to pay, I would say, huge bills. Just putting here, the computer battery is about to die. Sorry. I was answering your question about the why B2B is so important. The thing is that r- the landscape in Brazil, it works in a way that if you have a very good client, a very good customer, a B2B enterprise, you probably have your company broke even, and you have a very good business per se. You just need one client. For example, if you sell to Unilever, probably you're gonna have something that you'll be able to make like a 30% margin, and you're fine. So if you get a second one, and the third one, and the fourth one, the fifth one, so you're good. So that's a little bit you can scale in terms of healthiness much faster. So the companies that works with the B2B companies, they tend to be more sturdy. They tend to be companies that will, take a punch, and they won't flinch. So that's the thing. While B2C companies, and they tend to have very expensive expansion plans,
Mm-hmm.
because you have to buy them, and buying customer base is expensive. However, when you settle up as one of the leaders, you can reap the rewards. That's fine, totally fine. But B2B companies, especially when you're targeting mid to enterprise levels, I think your startup will be more stable. They will be more like camels.
Yeah.
Camels terms. Camels are a company that they are harder to die, and they don't grow as fast as unicorns, but they don't die as easy as unicorns. That's
Yeah.
one of the things. And so I try to get the camels rather than the unicorns, because those kind of companies, they make good investments, after all.
Right.
Sometimes unicorns, they are good, bets. I prefer good investments. So
Mm-hmm.
B2B companies, they tend to be good investments.
What's your perspective on addressable market for B2B in Brazil? Right. If I'm thinking about the US, the addressable market is large. There's a lot of mid-size, well, let's just say small, medium, and mid-sized businesses to sell into, especially depending on what industry you're selling into or whether it's horizontal, right? Is the same true for Brazil, right? What is the addressable market for B2B focused startups in Brazil?
I would say that they tend to be smaller than the US, comparables, just because of the exchange rate. Because, amount wise, they tend to be similar. So, for example, if you can sell something for a million reais, you probably can sell the same thing for a million USD in US.
Hmm.
But in Brazil, you're selling things for 6 times as cheaper than US, just because of the exchange rate. So that's the main thing that I would say. For example, take Unilever for instance. They sell popsicles, groceries. They sell chocolates, candies, and whatever, and consumer goods in general. This company, they sell a lot of things here in Brazil, and then
Hmm.
they can be your client. And sometimes the difference, it doesn't add up for the complexity or the number of sales, but also they add up for the complexity of the company. And the complexity of the company doesn't change much from one country to another, many cases. So that's one of the things. I have one company here. It's called For Intelligence, for example. It sells for big companies, like top thousand companies in the country. And this is a kind of company that help decision makers take decisions. So they are decision making helping tool. They have their comparables in the US are Data IQ, Data Robots, and those guys. Those guys have raised a few hundred millions, and we have raised just a few tens. And then in terms of size, they are much bigger, but we are much more efficient than
Hmm.
they are. So if they try to come into Brazil, they gonna they're gonna have a hard time because they charge in USD. So their price by default is six
Mm,
times as
right.
much. So they are out of the
Yes.
market by price wise.
Right.
And for example, if they sell for US for a million for a product, they're not gonna sell it for maybe 50K because it's the same company, right? It's Unilever. You either buy 100 a million in each country, or you don't. So
Right.
that's one of so sometimes it actually opens a window for us to go to the US and actually eat their lunch.
Yeah, I didn't think about that. If you can, if you are forced to build a more capital efficient business, and that enables you to sell an equivalent product for a lower price and still make money on it, right? That
Exactly.
does prevent other foreign companies from coming in and selling simply because of the price, but it also opens up opportunities for you to sell if you're a Brazilian company into the US because you have an equivalent product that can be sold at a lower price. I didn't think about that, but that's actually an interesting point. And I know we're coming up on time here, coming up on the end of the year as well. So as we roll into 2025, anything that folks should be looking out for, whether that be aspiring venture capital associates, LPs, or even founders looking for some investment? I should say
Uh,
looking out for from Airborne Ventures specifically.
I think what they can look out when they reach us is that they can look they can expect not investor, they can expect partners. And that's the idea. Our approach to venture is that we want to make sure that we are business partners, and we are not going to be executives in the company. We know these things, but we do have executive experience. So one of the things that we have done is I try to pull my LPs close to the companies and make sure they can add value to the company early stage, because that can be the difference from going bust or going boom. So
Mhm.
that's one of the things. And also, I'm very, very willing to help anyone that comes up and guide them. If I'm not the best investor for them, I'll also try to help them find the best investors. And that's for free. Okay. So just trying to help with the network. So now I'm not charging for that. So the idea is to make sure that everyone can be part of our network, and we are welcoming everyone from Brazil or outside Brazil as well. We're not investing outside Brazil at this point, but we will later 2025.
Yeah,
We are
and
building our knowledge base at this point.
yeah, no, it makes a lot of sense. And I know you've got Fund 2 coming up. So for LPs that are interested in Brazil, may want to ping you. Anything you want to share?
Yes, I think that every single time you are investing in a foreign country, you should do it with your someone with yours in your side, and I can actually help those LPs or those people who are interested in investing in the region to do a soft landing as an investor here, and also to have a healthy and I would say structured exposure in the country, because navigating a foreign country may be daunting at the first place, but if you have someone who knows the ground, that can be much easier and much less risky. My friends tell me that sometimes I'm crazy because most of my wealth is in VC, as in my fund and everything else. But I know for me that's much less riskier than the stock market, because I can control and I know what I'm doing. So rather than doing stock market that I have a little control.
Hmm. Awesome. Awesome. Well, this was, I think, a very helpful conversation, not just from understanding VC terminology and strategy, but also just thinking through investments, and the difference in investments between North America as well as Latin America, specifically Brazil. So, Eduardo, I appreciate you taking out some time and sharing as much as you have with us.
That was amazing call. I'm very happy to be able to talk to you, Darius, and thank you very much for the invitation. And I hope you can keep this partnership up, man.
Absolutely.